Hey everyone, and welcome to another episode. Today, we're diving into the fascinating world of quantitative finance with Gregory Zuckerman's book, The Man Who Solved the Market: How Jim Simons Launched the Quant Revolution. This book delves into the story of Jim Simons, a brilliant mathematician who defied the odds and became one of the most successful money managers in history. Simons' journey wasn't your typical Wall Street climb. He wasn't an economics whiz kid, he was a codebreaker for the National Security Agency, NSA, during the Cold War. Zuckerman details how Simons' exceptional code-cracking skills, honed at places like Stony Brook University and the Institute for Advanced Study, translated perfectly into the world of finance. The market, after all, is full of complex patterns and hidden signals, just waiting to be deciphered. Simons' big realization was that the traditional, intuition-based approach to investing was flawed. He believed the market could be understood and exploited through the power of mathematics and data analysis. This led him to found Renaissance Technologies, a hedge fund unlike any other. Here's where things get interesting. Renaissance wasn't filled with stuffy financial analysts. Instead, Simons recruited a team of brilliant minds, mathematicians, physicists, and computer scientists, who could build complex algorithms to identify hidden patterns in market data. These algorithms weren't just analyzing traditional factors like price-to-earnings ratios, they were dissecting mountains of esoteric data points, from weather patterns to satellite imagery, to find minuscule inefficiencies in the market. The book delves deep into the secretive world of Renaissance, a place where the details of the algorithms are closely guarded. But Zuckerman does provide a glimpse into their methodology, explaining how these quants, as they're called, exploit short-term market anomalies through techniques like arbitrage and high-frequency trading. The results were staggering. Renaissance's flagship fund, Medallion, achieved an average annual return of a mind-blowing 66%, a figure that dwarfed the returns of even the most legendary investors like Warren Buffett. This wasn't just luck, it was the power of quantitative analysis on a massive scale. However, the man who solved the market isn't just a celebration of Simons' genius. Zuckerman also explores the darker side of this quant revolution. The book raises questions about the fairness of a market dominated by complex algorithms that the average investor can't even begin to understand. It delves into the high-frequency trading practices that some argue exacerbate market volatility. The book also explores the impact of Renaissance's success on its own culture. As the pressure to maintain their phenomenal returns mounted, the firm became increasingly insular and competitive. Zuckerman portrays a culture where brilliant minds clashed and some felt undervalued. Key takeaways. 1. The power of quantitative analysis in financial markets. 2. The rise of the quants and their impact on the investment landscape. 3. The ethical considerations of high-frequency trading and complex algorithms. 4. The challenges of maintaining a culture of innovation and collaboration in a high-pressure environment. Analysis and my thoughts. The Man Who Solved the Market is a fascinating case study of how innovation and a data-driven approach can disrupt an established industry. Jim Simons' story is truly inspiring, showcasing the power of intellectual curiosity and a willingness to challenge the status quo. However, the book also raises important questions about the future of finance. As quantitative strategies continue to dominate, will the average investor be left behind? Your suggestions and similar reads. If you're interested in learning more about quantitative finance, I recommend picking up Fooled by Randomness by Nassim Nicholas Taleb. This book explores the limitations of models and the role of luck in financial markets. For a more historical perspective on Wall Street, check out Liar's Poker by Michael Lewis. This classic exposes the excesses and unethical practices that were rampant in the financial world before the rise of the quants. Thanks for joining me on this journey into the world of quantitative finance. If you enjoyed this summary, leave a like and subscribe for more book dives.